It's tax season, and we're seeing a lot of veterans disqualify themselves from using the VA home loan and not even knowing it. Listen, guys, if you're self-employed, there's a lot of factors that go into qualification for a VA home loan. This also includes full-time and part-time entrepreneurs that are out there. They're trying to make some extra money, but they really don't know the effects that has for them being able to qualify for the VA home loan. And again, right now, people are submitting their taxes and we're just looking at them like, man, what did you do this year? And basically took money away from yourself, right? The complexities with being self-employed really revolve around paying taxes, okay? Nobody wants to pay taxes, so they write off as much as humanly possible. But again, that's what lenders are looking for. They're looking at that bottom line, and sometimes it's a time component because you really need to have 2 years of self-employment income to be able to use that. Now, lenders are going to look at this in a couple ways, right? They're going to request they're going to request your individual tax returns, and depending on how you file them, right? Also, kind of if it's a company, LLC, if it's a pass-through, are they multiple owners? Are there K-1s involved? Are you 1099? There's a whole slew of different ways that can happen, but they're going to primarily look at your tax returns. And if you have business returns, they're also going to look at those. And they're going to look at, you need to submit your full tax returns for both, not partial. Sometimes people submit 3 pages. I'm like, I can't do anything with that. We need all the pages because we need to see how many businesses you have. And for any business, when you have more than 25% home ownership in that business, you're going to have to provide tax returns for that business. And the reason I mention that is that sometimes people will be like, well, I don't want to submit those documents. Well, guess what? You have to in order to use the VA home loan. On top of that, right, let's say we're into 2024, you're going to have to provide a year-to-date profit and loss statement along with a current balance sheet so they can review that, yes, you're still making money. It definitely, if you have decreases in income, that could be a big red flag for lenders where they might say, well, now we're going to have to use the lower income. And if you have a big gain in income, the same thing could apply. They may cap on how much they use in that gain. The key really in self-employment income is to be consistent or slightly going up, right? It's awesome that you had a huge year, your income skyrocketed, but then it just doesn't provide stability for the lender to use it. And it makes sense, right? Listen, if you had a really good year, there's no guarantee you're going to have a following year. I wish you the best, but it's just tricky. And the other big thing to the self-employment income that a lot of W-2 employees don't realize, this is every single time this happens, it's let's say you have a W-2 job making $100,000 a year. I'm gonna use easy numbers, but you have a side business. So let's say you take pictures for weddings, whatever the case may be. You get, let's say you make $12,000 for the year, $1,000 a month because you do weddings throughout the entire year, whatever the case may be. Now you buy equipment, you're expensing a part of your house for expenses. You're expensing all the gas that you have. You have so many write-offs that you actually end up writing off $25,000 and you made $12,000. Okay, and now you have $100,000 a year annual salary. So that $25,000 that you got is going to offset the $12,000 in income that you have, giving you basically negative income. That negative income then is going to count against the $100,000 that you made, giving you essentially a less effective income to use to buy a property. And unfortunately, we've seen it where it's disqualified people from home ownership. That's why it's so important in advance, especially when you're self-employed, is to come up with a plan on, if you're going into home ownership, you may have to file your taxes a little different for 2 years. And we see that all the time. They may do less write-offs. one year versus another. The same thing applies if you do like gig income, right? You're driving for like a rideshare company. Same thing is going to apply here. You're technically self-employed. You're going to have write-offs. All those things are going to count against you. Now, what happens when you have less than 2 years of income, right? And again, the VA considers stable income 2 years. So there is an exception if you have less than 1 year, less than 2 years, but more than 1 year, and you can show you have previous experience in that industry or you have very specialized training, then a lender can consider that. If it's less than a year, basically you're up the creek without a paddle. They won't use that income. And to be honest with you guys, the less than 2 years piece of doing thousands of transactions, only one time has someone been able to qualify. And again, the reason behind that is that it normally takes time to build a business. So in the first year or 2 years, someone really is going to have a lot of deductions and expenses that they're going to be rolling into their business. Again, it makes sense. Why wouldn't you, or why would you want to pay taxes on that money when you could write it off? That's the benefit of a business, but there's a catch-22 to all that with deductions. So let's talk a little bit about deductions and expenses claimed on your tax returns. So depreciation can be added back in to your income. So that's a positive part, because sometimes people have cars, businesses, and they depreciate that. That can be added back into your actual income to be used for qualification purposes. Now, there's a downside. If you have rollover expenses year over year, and let's say you might had 1 year had a real big deduction of $500,000, but then you make $100,000 a year. Well, guess what? You're actually making zero income because you have a rollover deduction. That may not happen to a lot of you, but we see it happen. So that's why I'm mentioning it, right? You really need to talk with a professional like a CPA, accountant, to go over those deductions, because it's all going to vary based on the type of income that you have, type of job, the industry that you're in, what they allow, what they typically don't allow. Another big one is car expenses. So, and credit cards. So let's talk about that. And like, let's say installment loans. In the beginning, a lot of entrepreneurs, people that are wanting to live that dream, are going to take out that debt on their personal credit cards, their personal credit, right? Like, let's say you need to buy a car, a company car. You may have to buy it for it in your own name because you don't have company credit. So now what do? So it's somewhat similar to the 2-year rule. If you take out a car, right? If you buy a car yourself and lease it to your business, is what people typically are going to do. They create an official lease, the whole thing's formalized, and then they go off and do it, okay? What's going to happen is that if you can prove that your business had a business account solely has made all the payments on the car, then you can exclude it from qualification purposes for your own mortgage, okay? The similar thing applies if you need down payment and and you pull that money from your business. If you are the sole owner of that business, it's pretty straightforward. And also, this is why it's important to have a CPA, because the lender is going to ask the CPA to confirm that you taking the money out isn't going to affect your business. And other times, I did forget to mention this, is that the bank may require that an accountant or a CPA prepare the financial documents like the current balance sheet and profit and loss statement to the lender. So this, and sometimes people be like, well, I don't have a CPA that can do that. Well, now you got to scram and find one. It can cost you more money. So you really need to prepare ahead of time for self-employment. If you guys have questions or want to go through taxes, schedule a call with us. A link is down below. Please hit the like and subscribe button, and I'll catch you guys soon.